In fast trading, time is the biggest asset. If you only have 1 minute, can you make the right decision? This is where the EMA and CCI strategy comes into play. Scalping is a trading style that focuses on making small but frequent profits. Many novice traders are afraid of this style because of its high speed, but professionals know that scalping can be one of the most profitable methods if they have the right tools and a specific strategy. In this video, we will look at one of the most popular scalping strategies on the 1-minute time frame, a combination of two exponential moving averages 7 and 15, with the CCI indicator. This combination has attracted the attention of many scalpers in the forex, cryptocurrency, and even global indices markets due to its simplicity and high efficiency. Before we get into the main discussion, we should fully familiarize ourselves with the tools of this strategy. Our first tool is the 7 EMA, or 7-period exponential moving average. The EMA gives more weight to recent prices and therefore reacts more quickly to market changes. The choice of the number 7 is not accidental. This number reflects short-term fluctuations well and is suitable for scalping on the 1-minute time frame. The second tool is the 15 EMA. This moving average moves slower than the 7-period EMA and gives us a more general view of the trend. Comparing these two moving averages actually shows us where the market is. Is it changing trend, or is it still moving in the previous direction? The intersection of these two averages is the point that many scalpers look at as an entry signal. The third tool is the CCI indicator, or Commodity Channel Index. Contrary to its name, this indicator is not specific to commodities, but is used in all financial markets. The CCI shows the deviation of the price from the statistical average. When the CCI is above 100, the market is overbought, and when it falls below -100, it indicates oversold. In this strategy, the movement of the CCI above or below 0 helps us gauge the strength of the trend and avoid false signals. First, set the time frame to 1 minute, M1. This time frame is the heart of scalping as it displays price changes in the shortest time. Then add the following indicators. EMA with period 7. Recommended color is light blue or dark green. This line should be prominent because it moves faster. EMA with period 15. Recommended color is red or orange. This line moves slower and is very important for comparison with EMA 7. CCI with period 14. This is the default number of the indicator and works well for most markets. For greater clarity, draw the levels +100, 0, and -100 on it. The important thing is that your workspace should be simple and clean. Adding too many indicators will only cause confusion. In scalping, speed of decision-making is crucial, and any clutter on the chart can be detrimental to your business. So these 3 tools are... Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Part 3. Conditions for entering a buy trade, extended. To successfully enter a buy trade in this strategy, 3 main conditions must be met simultaneously. These conditions are, in fact, filters that help you enter the market only in situations with a higher probability of success. Let's examine each of these conditions in detail. 1. The 7-period EMA must be above the 15-period EMA. When the 7-period moving average crosses the 15-period moving average from below upwards, we call it a bullish cross. This cross is a sign of a change in the short-term trend to an upward one. Scalpers are looking for exactly these moments, as they indicate the beginning of a short-term upward movement. Note that on the 1-minute time frame, such crosses occur quite often, but not all of them are valid. That is why other conditions must also be taken into account. 2. CCI must move above the 0 level. The second entry condition is that the CCI indicator breaks above the zero level and preferably is moving towards plus 100. Crossing zero means that the buyer's power is increasing and the market is inclined to move upwards. If the CCI is above the plus 100 level, it is a sign of high strength of the uptrend, but entering in that area can be a bit risky as there is a possibility of a short correction. The best case is when the CCI has just broken the zero level and is moving upwards. 3. The price must close above both EMAs. The third condition is that the current candle or the previous candle closes above both EMA lines. This is a sign that the buyers have managed to take control of the market. If the price is still below the moving averages, the entry will be premature, and the probability of failure is high. Part 4. Conditions for entering a sell trade. Advanced. Just as a set of conditions is required for a buy trade, 3 key conditions must be met to enter a sell trade. Scalpers should always look for positions with a high probability of success, and these conditions are designed to do just that. 1. The 7 EMA must be below the 15 EMA. The first sign of a downtrend is when the shorter EMA, 7 period, crosses the longer EMA, 15 period, from top to bottom. This bearish crossover, or bearish cross, shows us that the sellers are taking control of the market. On the 1-minute time frame, this happens many times, but it is only valid when other conditions confirm it. 2. The CCI must move below the zero level. The second condition is related to the CCI indicator. When this indicator is below zero, it is a sign that selling pressure is greater than buying pressure. The best time to enter the sell position is when the CCI has just broken the zero level and is moving towards minus 100. If the CCI is directly in the negative 100 area or below, it indicates a lot of sellers' power. But entering at that point can be risky because there is a possibility of a short-term reversal. 3. The price must close below both EMAs. The third condition for entering the sell position is that the price closes below both moving averages. This indicates that the sellers have managed to keep the price lower and there is real downward pressure in the market. If the candle is still between the 2 EMAs or closes above them, it is considered an early sell position. Section 5. Take profit and stop loss. One of the most important parts of any trading strategy is setting the take profit and stop loss. Especially in scalping, where trading is done on very short time frames, lack of risk management can put your account at risk in a matter of minutes. In this strategy, it is recommended to always place the stop loss behind the last candle against the trend. For example, if you enter a long trade, place the stop loss behind the last bearish candle. Conversely, in short trades, the stop loss should be behind the last bullish candle. This will help limit your losses if the market moves against you. For the take profit, it is better to use specific risk-reward ratios. The most common is a ratio of 1:1 or 1:1.5. That is, if you risk 10 pips on a trade, your take profit should be 10 to 15 pips. Remember that in scalping, the goal is to make small but consistent profits, not to chase big moves. The main advantage of this strategy is its clarity and speed. You can find multiple opportunities in short periods and make small but consistent profits. At the same time, you should not forget that scalping requires concentration, careful risk management, and high mental discipline. Without observing these principles, even the best strategies will not bring the desired result. If this tutorial was useful to you, be sure to subscribe to the channel and turn on the notification bell so as not to miss our next videos about trading strategies. I will also be happy to write your experiences and questions about this method in the comments section so that we can discuss them in future videos.